Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. As we begin to look at the week that was, we can see that all three major indexes basically were blase for the week. The Dow Jones fell a little over 150 points. The Nasdaq did rise 12 points, and the S&P 500 fell 7 points. Because the S&P 500 fell for the week, we've had our first weekly decline for the S&P 500 in more than a month. And what's interesting, as we come to the end of March and we look at the end of the first quarter, we can see that the financial sector was up about 20% for the first quarter, with technology coming in as the next largest percentage gain off pretty much Apple. But we can see for the first quarter, it's been very good for the market. The Dow Jones up 7%. Nasdaq up 17% and S&P 500 up 11%. So first quarter definitely has been good. And what's interesting, because you guys know, for me, it's all about catalysts. And as we come to the end of the first quarter, that means we're getting ready to start the second quarter. So we do have a new round of earnings that could potentially give us the catalyst that we need to move even higher. We did have some renewed concerns about global economic conditions across the seas. The PMI data came in a little bit weak for Europe. And then even some of the metal industries here suggest that there's concerns about the steel production in China that is starting to level off. There's definitely some more concerns about whether or not that's going to spread out. Both Bernanke and Geithner spoke about the economic conditions in Europe and whether or not they'll spill over. And they believe that our banks could withstand anything there. We'll have to see. At the beginning of this week, we had Apple announce a quarterly dividend over $2 that will start in their fourth quarter. Their fourth quarter doesn't necessarily match the traditional 1, 2, 3, 4 of the year. So that was the big news of the week. Of course, we all know Apple's sitting on about $100 billion, so certainly they can do it. They're also going to do a $10 billion share repurchase program. There really wasn't anything that much on the economic front. Certainly, as job numbers are improving, the jobless claims went down a little bit. And the housing data was pretty much either on par or maybe a little bit weaker, but for overall, nothing really moved the market. So as we come into the last week of March and look at earnings, I do have room up there for our Apple haters. It's going to be interesting what they have to say about their playbook and their tablets, and of course how much Apple is getting into the business, because that's their core business clients. And is Apple making a dent, or for that matter, is Android making that iOS, is that making a dent into their business? Economic data for this week, we do have a couple things there. We got consumer sentiment on Tuesday, we got GDP on Thursday, and consumer confidence on Tuesday, GDP on Thursday, and consumer sentiment on Friday. So we do have a couple catalysts as we end the month of March. We are starting off by looking at the dollar chart. This is one of our market sentiment leaders. And we can see that we ran up and touched that 81 price level, and now we're falling back, and we'll see what happens as we hit 79. But we can see that the market is sort of ranging just a little bit here over for the 2012. As strong as the market has been, the dollar has been weak, seeing that inverse relationship. And as we said, last week we saw the dollar rise and the stock market rise, and now we're seeing the pullback. So we see our point of control right here at 80. We'll see if we can get back above that, but the dollar is a little weak. Moving on to gold. Well, usually weak dollar equals good for gold, but here we have a marriage where even gold is taking a little bit, and what was once support at 1660 is now acting in as resistance. So we'll see what happens. But gold also is weak. 1660 as a resistance, 1670, and then we have our 250 moving average right above it. And finally, crude oil. It's now creating a new range. It used to be 102 to 96. It used to be the range, and now we're watching 102 to 110. We are starting off by looking at the S&P 500 on a daily chart. Zoomed into here a little bit. You can see this beautiful uptrend that the market has been in. And of course, we can see the little pullback that we've had here this week. We hit 1414 as a high, and we pulled right on back. Little bounce here at the 20 moving average. Looking at our indicators, they did finally come out of the overbought range a little bit. Of course, Friday is a pause, so we'll have to see. And again, I think we may see a little sideways action, but as we said, we do have some economic catalysts that could project us one way or the other, especially those consumer sentiment numbers, and even GDP. We got to pull back on the daily charts. Definitely overbought. We'll see where it's going to go. We'll get a better look at that on a weekly. Zoom on in for you. We can see that really first big red candle. Really have a doji in here, but obviously in over a month we haven't had any red, and then you go all the way back to about 2-3 months. In 2012, we've only had 2 red candles for the weekly charts. Still though, overbought here on our weekly indicators. Now what we talked about last week was that our monthlies were finally getting into concert of being overbought. And so as we zoom in here on a monthly, we can see that certainly a beautiful candle here for the month of March. And we're still heading up towards overbought, but not quite there. As I come back here to the daily, switch over here to the NASDAQ. And we'll zoom on in. And we can kind of see for the 2012 how good it's been, but you can kind of see that the NASDAQ has kind of been going sideways here for 2 weeks. Yes, we hit this high of 30.90, but really see a little sideways price action here. And of course, our indicators are overbought coming out of that on the daily. Moving over here to the weekly, and we can see still green candles. Look at 2012. We have not had a red candle in 2012 for the NASDAQ. How about that? And definitely seeing overbought price levels on our indicators on the NASDAQ. One more time for the monthly, and we can see let's pause for a second as this is loading. There we go. And we can see again a beautiful move. We got 3,000 psychological barrier there. But as we hit overbought here on the monthly, we have to begin saying, do we need to pause? And we have to start watching what the next round of earnings season is going to do for us to allow us to stay. Because as we say, we can stay in overbought. There's nothing wrong with staying in an overbought condition. That doesn't mean immediately sell, but it does allow you to raise caution on whether or not you want to keep buying the dips as we are in this overbought stage. Okay, so let's go ahead and take a look at our industry leaders. First, starting off with Apple. And one thing we can see is here's Friday, so Monday, so we definitely had a gap up on the Apple's announcement of the quarterly dividend. But we're hovering right here around this 600 price level, so it's really going to be interesting to see what's going to happen here. Matter of fact, I'll go in here and draw in another one of our lovely triflings. So there's definitely a psychological barrier going on here at this 600 price level. But right now for Apple, I'm going to say sideways to up. You can see up here, we got a point of control at 597. We can see this volume accumulating right in here. And it's definitely, and you can see it's definitely trying to hold above that 580 price level. Amazon. Now, we've been talking about Amazon not participating in this move up with the rest of the market. Now, this past week, we did get a nice little move up here a little bit on Amazon. And we can see there's this volume vacuum here. We get below 192 to get all the way down here almost to 183. So we'll have to watch that on our daily chart here, watching if we get below sort of this rising 3 pattern right in here. But overall, we're coming into the resistance of 196, 197. So you can see we failed here before. So we'll see what happens here this time as we get closer. And also we can see the 200 moving average peaking its head in here. So I'm going to go sideways with Amazon. Next is Google. Google has made a move here in the recent weeks. Very nice. Got out of the 620 range. We talked about that. Broke even above this little swing high here. And so now you can see where's Google right now. It's basically hanging at this gap here at the beginning of the year. So we'll have to watch here and see. I'm going to watch whether or not I should put my line here or at the bottom here at 650 where the gap down is. So we'll watch, but there's definitely a line. You know I love my lines. And we can see the volume really accumulating here in the 640s. Google sideways to up, really up. Goldman Sachs, we said financials have been leading us higher, and we can see how Goldman Sachs above the 200 moving average, tested it, moved right up, and now it's heading to 130, which is where we had some basing here back last year, early last year. We had some basing here, and so of course what was one support will it now act as resistance. But in the short term, we can see that I would say sideways to up for Goldman Sachs, point of control at 122, a lot of volume in here in the 125 range. What about IBM? IBM definitely taking off a little bit here. Looks a lot like Apple, a lot of volume accumulating. And a little sideways price action. So IBM, I would say sideways to up. Beginning to see 204 here starting to act as a price level that we're going to have to watch. I'm going to watch that to see if I should draw a line here at this 204, 205 price level. Intel has been following IBM, and we can see that. And we're starting to see 28 being our resistance price level that we're going to have to watch. In fact, I'm going to go ahead and draw in 28 for that price level. Sideways up on Intel. MasterCard. I had to think a second, who was next? Sorry. MasterCard definitely can start to see some 425, 430-ish resistance coming in here. Sideways to up. You can see 419 acting as a volume support price level, something to watch. Netflix wasn't participating in the move up, sort of like Amazon, but here it is coming back up, testing 125, testing 127. We'll see if it fails here again. Just going to say sideways on Netflix. And finally, Priceline, which is really taking off here. Got out of our, once it really got out of this range, and reason why I draw lines, once it got out of this range, it really took off. And of course, the earnings didn't exactly hurt also. But it's just definitely up on us. So for the majority of our leaders, we have sideways up. We have a couple that are just flat out up. Nothing is down at the current time. As we come to our education spotlight, we're really kind of summarizing the whole purpose of trading plans. And the basic thing of trading plans is to make sure that we're trading realistically and we have objectives. We know why we're trading, and that we have a criteria that explains why we're trading, how we're going to trade, and what we're going to trade. We can't trade just off of our what we call our profits of our friends and indicators and gurus. We have to have a purpose for trading. We have to know what type of money we're trying to raise. We have to have objectives, and we have to have defined entries and exits and all of that. Otherwise, you are not letting rules affect your trading, and you're now getting into emotional. You're going on what you feel, and there is a place for intuition in trading, but you still have to have a foundation of why you're trading, what you're trading, and how you're going to trade. As always, we want to make sure that you're commenting and subscribing to our channel so you can get our latest updates. We have, as my son sneezes, we have all of our normal resources for you with our emphasis on our coaching. I have a couple new clients this week. And of course, our managed forex accounts put our expertise for work, full transparency, leading brokers, fully regulated. Your accounts giving us access to trade. You're not sending us off to some hedge fund that you're going to be on American Greed later in the week. But in the end, it's about your ability to make informed, educated decisions about your trading and not allow emotions scare you from pulling the trigger. Thanks, guys, and I'll see you next time.